Hi, this is Ali at Wave Sage. I'm going to go ahead and do a video for getting ready for another week of trading. Like always, this isn't financial advice. Always do what's best for you. So I wanted to just see how the market opened. We had some news hit Sunday evening that Credit Suisse is closing up shop and it's being taken over by UBS. And a lot of swap lines have been open to allow liquidity to flow through the system as the transactions that occur with such a takeover take place and try to avoid panic. So this is happening, and it's going to create volatility, I'm sure, but it also creates confusion amongst traders, which is why I don't trade news. I don't react to news. Essentially, I don't hear a news event and then make a trading decision. I just look at news as a way of understanding, the psyche of the how can I say it, the masses, and the masses do move the market. And so I do like to understand the news, but I'm not worrying about what's the Fed gonna do. I'm not biting my nails and like, do they raise or not raise, and like, don't really care what they're gonna do. Uh, I could give you my opinion. I think they will have to raise. If not, then I would expect people would be calling on Paul to resign immediately, and he may even do that if he doesn't raise, because you can't go in front of Congress and be so hawkish and so naive to not know the banking system was on verge of collapse. But if he doesn't hike, on Wednesday, essentially he will be admitting that he was that clueless. But the best thing he could do is raise and say, yeah, these things are going to happen. We caught it. It was sooner than we thought, but we had the situation under control now, and we're going to continue to fight inflation. And then I think the market sells off dramatically, back to the way we had been trading prior to these banking problems, only for new problems to probably emerge. That he'll ultimately will be forced to stop, but he may be in a better position to do that if the CPI can come in lower in the coming months. But at 6%, it's still too high. 3%, perhaps you'll see a pause. Under 3, I think it's a no-brainer. He's going to stop. But 6, not going to happen. I don't think so. I'll be really surprised. But it doesn't matter from the big scheme of things. So one of the things I wanted to look at, what is UBS? Is that just going to pass contingent on to those shareholders? So let's take a look at UBS and what that chart looks like, and see where we may be going with UBS. So if we go to the weekly time frame, we could see we have a massive drop, the end of the grand super cycle in April 07, and a massive straight down crash. This is W, and we've been in a consolidation wave for a good 15 years, and now we'll get the capitulation wave, which I think we just started. So it does seem like darker days are on the horizon. What would negate this view is if UBS could take out this high here at 22.30. So if it could trade to 23, then it would negate this view. But as you could see, it has a sharp decline, reminiscent of how a wave Y would start, very similar to its cousin, the W wave. So could UBS hit $3.84, or perhaps not even survive it? We don't know that yet, but that's what the chart seems to be suggesting. But we don't have a confirmation, not quite yet. If the weekly were to break here, then I would say that would be confirmation. So not yet. We'll see how it trades. It could still, if it can get up. So I would say UBS, lean in bearish, lean in as if it's going to have a contagion, and shareholders will be really angry and regret the takeover decision. So again, the question is, who got over on who? Maybe UBS's deal is going to backfire on them. Now, the other thing is UBS may be in trouble in itself, and then taking over CS could be camouflage to screen the inevitable, so it has someone to blame, something to blame besides itself, knowing that this is coming. So either way, I'm not a buyer in in UBS until it can take out 23, and then perhaps this count could change. So this again, where are we heading? FRC, we've talked about that, not finished. So we need to go lower. So this banking, these banking equities still have more downside, and because of it, the market is still going to be under pressure from this perceived issue. Now let's talk the stock market. The NASDAQ is very interesting. So the cash market right now on the 45-minute looks as if we have an A, B, C up and we're done. And we have a 1 and we're in 2. The SQQ supports this view. It hit the buy area, bounced, pulled back. It really wanted to hold 33.26. If it doesn't, then this is 1, 2, 3, 4, 5. An impulse after a 5-wave consolidation, which could be an A, B, C, D, E megaphone, which also would imply that even though it's 5 waves, we could retrace, which is fine, but what it would mean is we would have another big move coming later, and that would imply a lot more upside in technology before we have a bigger decline. So it's actually a pretty significant pivot when you look at it through the lens of the SQQQ. When you look at it this way, it doesn't really seem that bad if we break 309. But if you look at the SQQ, I think that could be detrimental. So just keep that in mind. So you have to keep an eye on this. I think losing this is something that may imply more upside in tech, but it won't. It just won't go straight up either. Like I said, the way I see tech is if it breaks, you have a 1, 2, 3, 4, 5, or maybe even 5, and then we'll get a pullback, right? But this would fail. This pullback would fail, and we would get a massive wave down, which would be a massive pump in tech. So what does that look like? Translate it to the triple Qs. Well, that would be 5 up, right, from this low. So that would be something like that. And then you pull back, right? And then it's a massive, not massive, but a pretty good pump. So if this happens, I'll be looking to get out of any short trade. Its setup is lost. The setup would be lost in my mind, the short setup. Even though some people have this as a flat, put the 1 here and an A, B, C, right? And they're looking here. But the SQQ gives you another perspective, right? Because these things trade together. So there really is no, could this be an A, B, C, a flat scenario too? Down like that, where this is a B, where it's 3, 3, and 3. Well, let's just take a look and see at this. Is this 3 waves or is it an impulse? Up. And if you look, you see the peak RSI is here and here. It's 5 up. So it doesn't seem to be, this does not seem to be a structure that could support a flat. Let's look at down here. Now that does, but that's 3 waves, which it should be in this 4. But this looks like some kind of 5-wave structure. 1, 2, 3, 4, 5. So like a 1, 2, 3, 4, 5. So because of that, I don't think it's a flat. Also, if it's a flat, let's take a look at where I would have expected it. We didn't quite get to where we need it, so it finished a little early. So that's just another data point. So again, if it's a flat, great. Then you're like, well, if it's a flat, then this is 1, 2. But wait a minute, this is 3 waves down. So 1, 2, 3, 4, 5, and then we come down here. You see, it starts breaking down. So I don't think it's a flat in the Qs, but do what's best for you. I do think if we break down, it's very, I would be really careful here. Now, it could even be a 1, 2, 1, 2, right? And then we just go right into a 3 and a massive move, right? Higher. So the market is dangerous. The market is not, is going to try to confuse traders. But when I look at this structure, right now the setup is there. 1, 2, 3, 4, 5, A, B, C, a lower, high, 2, 2. It's the setup. So let's take it. Let's take the trade. Let's take that short trade and see if the setup works. If it doesn't, there'll be other setups. I think if it doesn't work and it can move up or even break this high, it changes the scenario, and my alternate is still then B comes up. But then how high does B go? And are you willing to lose all that money? I'm not, of course. So that's why this isn't important. And so what is the futures doing? Well, let's take a look. Futures hit, pulled back. Now it's finding trouble where I would have expected it to. So if this is a top, I would expect a 1 and a 2 and down. In here you have an A and a B and a C, and it's right in the area where I would have expected sellers. We got selling, it's struggling. We'll see what happens tonight. Again, can it push above this? Now, this could also still be 3 waves down. It could be, in other words, a 1, 2, 3. We could still be in 4 and get 5 later. So it's not all clear. And also that's something to keep in mind here. But once the cycle breaks, which it's about to, then it will be too strong to be a 4, and then we'll know the cycle's over. And then then you have a stop loss at 30659. Now the 4-hour stochastic has crossed over bearish. You see that? And last time it did that, we had a drop, right? And you can go and see every time we've crossed over on the 4-hour has been tied to major peaks. So it seems to me technology is telling me the move's gonna fail, at least in the technology sector at the moment. The 4-hour, the 45-minute still could go a little deeper. The RSI hasn't fully, so there's still more downside. And then let's go to the daily. The daily is almost at the extreme. We haven't had crossover yet, so we'll keep that in mind. The weekly at extreme here, and I believe it's close to breaking, or it did break the uptrend, so just keep that in mind. So again, a lot of things. Now the bulls have, though, the monthly. Look at the monthly. It's about to split open. See that? This is the only thing that makes you stand back and go, perhaps this is how the correction plays out, because of that monthly stochastic. We drop down and another swing. Okay. Then the 4-hour and 45-minute and the weekly, all those bottom. We drop down to here. Boom. Then what it changes everything to is this is a W, an X, and then a Y, and the monthly finishes at the 618. So as a trader, I'm looking for that. If we come down to this area and we can't get follow through or down into here, I'll be looking to book profits. But if we have to blow through this with volatility and volume to negate that view, so that view though is probably the one that I would be leaning to as my preferred view for the moment, but I'm not ready to change my charts just yet. Something like that. Then B comes over here, and then this is really A here, and then 4 is there, and you put 5 there. That's how it would change. It is very possible because the market is getting oversold and the Dow should balance. So these are things I want to process. So just keep in mind that if you're trading, you need to be careful of that. And that would also be dollar pop and then a dollar drop, right? So that would be the dollar, here in this WXY, and then pulling back in probably another 5 waves, and then bottoming in X, right? Bottom in X, and then you get a massive move in Y up to the 122.24, which would be your crash wave. So that's this scenario right here, and I don't really show it. Now, the other scenario, what I call the crash wave, is it's not this. The X is already done in this 3-wave move, and we have a 1-2, an impulse, and either the impulse is done or the impulse is finishing here, and then we get a massive move higher in 3, and we're off to the races. So that is what my charts are showing as the dollar case, but again, we don't know. The dollar did not break that tonight. Looks like it's trying to hold that, and I believe we won't see that direction until the Fed meeting's over. I bet the dollar will just be stuck here. So that is tech. I spent a lot of time on tech so you can understand it, because the other ones aren't too, here you have an ABC and you have a 1-2, 1-2. So this is the bearish setup. Again, it could be 3 waves where you have 1, 3, 3. So this could be W. We could get a bigger bounce in X and then go down in Y. The SPY 1, 2, 1, 2. The other alternative is this is 3 and a connector, and then this is 3. Here's a connector, and then you have an AB, and you have one more drop to 374, and then you get a move higher to 430, where then again, just like the NASDAQ, you put A here, and then you put this as WXY. Something to keep in mind. So I may also keep shorts on, and then if we're in this area, hedge it with long positions. Hedge it long and dump them if we break out of this area. But long, so like in the triple Qs, if we're trading down in this area at 281, maybe take a TQQ position or a call or whatever you want to do in this area as a hedge against short positions, just to play against this 3, 3, and then 3 move. IWM has not retraced. This could be a 4 and a 5 where 3 is done. It could be another 1, 2. It's too many possibilities to worry about. I'm not going to trade that unless you get a more significant rally. So I'm just kind of on the sidelines on that. Bitcoin is getting a lot of euphoria. Again, my biggest sell side indicator in Bitcoin, and it has been for the entire correction, if I go back, And and if you buy older videos, we had we shorted that. I was a short. We even shorted this. But at all these points, there are people that would post, like 50,000, in your face, and someone would say, we're going, this is, we're going to a million, and boy, bears are fools, and they're so stupid. The guy's shorting it, and like total mocking it, like people, and these are people that never post anything. These are calm individuals, but they still felt the need to have to like spike the football. And every time I've seen those posts, this is what happens next. So that's what I'm seeing tonight. So I think Bitcoin is in too much euphoria. I think it's dangerous, but I still my sell area is 29,331, and of course 30,000 would be a nice even number. But this is where I think the move can fail, in have a massive rejection. So just be careful. I don't think it's topped yet. You have the divergences you need. Now within this wave here, it doesn't look like you have the divergence yet. So probably a little bit higher. And then I think it's a high risk long position. A high, and I could be wrong. Do what's best for you, but knowing where the market is heading, I mean, again, maybe I'm proven wrong, but it just seems sending me these two euphoric again, and needs to be reset, because even when we were trading here, that wasn't happening. Actually, there was a lot of bearish posts about shorting and and all that doubt, a lot of doubt, and that doubt obviously played off here. But now it's no more doubt. Now all those people that were shorting this, they're silent, and in fact, I think some of their accounts got blown up, and that's sad because, Elliott Wave Sage told you guys down here when we broke out again in my videos, we're set up for 30,000. And sure enough, we're close. What the news was, we didn't know what the news would be, but here we are. Now it's at the moment of truth. If we can push above 30, I think it's more significant than people give it credit for. You have this massive double top, neckline, massive supply, resistance and supply, overhead supply. If you can trade back within that and within this area and close, then I think you've got my attention, and I may need to change where we are. But right now, as long as you're below that level, this could be just a rejection and then boom, down like a back test. Okay, oil lower, of course. I'll get rid of that. Gold is in 5. In the target based on my system would have been 1996. We were a few dollars away, but it doesn't look like the swings are done. Now this looks like 3 swings. I was looking at it, so you gotta be careful with another flat where this is 5 up. Again, I can force a 5. I could do that, and there is divergence in the wave itself. It's not pretty, and then you could pull back in 2, and that would be a buyable dip in my mind if that happened. So if it doesn't make a new high and just dumps, I would be a buyer at 1761 in this area, and that would be a good opportunity to try to get back in on this if you missed a move. We'll have to wait and see what plays out. Don't know yet. I'll still label it this way for now, but it looks like it needs a 4 and a 5 before it's finished, before this one is finished. Ideally, we'd like to break the all-time high, but I was thinking if you break the all-time high with an impulse off the bottom, it could actually cause a technical top end gold. We don't expect it, right? But that could be one. But now you made a high. You broke the high. You have 5 up, so that one could be set, and that could be it for the whole cycle since 2015. So again, very dangerous. You almost want to see a pullback. It'd be healthy, but we don't have 5 waves yet. So gold, it's like I said, you're FOMOing in a cycle that started in 2015. So you're even though it feels like you're early, you're really kind of late to the party. Unless you can get some separation. But those are rare events, especially something like this. So you gotta be really careful FOMOing in on it at the moment. But I wouldn't. I'm not trying to short it. That's for sure. So in silver, lagging, right? It's lagging. Silver's still in danger until you could take this high out, 24.65. So, um, and then I think that's all. All right. So the video, it looks like the market wants to go higher. Like I said, you got to keep an eye on tech. Tech makes that push higher above. And some people think it will because AMD and Apple and all these still don't have finished sequences. I think it's going to be interesting to see what tech could do. If it could break this high with the divergence, it could still pull back in 5 because you'll have 5 up. But then that pullback, I probably will leave the trade. I'd leave the trade, and I don't think it's a flat, in my opinion. So do what's best for you. Like I said, I've seen people calling this as a flat, which implies we should go higher, but stay below 12,954. But I believe that doesn't jive with the SQQ. Unless for some reason maybe there's an exception where we could make the high, pull back, and then the cash market opens down here, so the SQQ technicals remain in place. So maybe that's possible, and then get back in sync. So we'll see how tech plays out. It could be one of the biggest short opportunities imaginable right now. However, you have to use risk management if you're going to try that. So that's the market overall. And again, I gave you my thoughts about the banks. I think they're in this kind of endgame scenario, right? You got contracting money supply, and you have tightening of financial conditions. So credit is disappearing, and of course, that's what you need to stop inflation and even deflate the economy, but it's coming out of the wrong places that the Fed would prefer. So one way I was thinking is perhaps they will ease in this sector of the market excessively, but then make up for it by taking out and being more aggressive on another sector or another area to kind of net, still tightening. So look for that, like wash, that wash twist operation. They've done this type of twist type thing before in the early, in the 2011, 12 time where they'll play like that game. So look for that game. So if you think of it as a big picture, if we're adding a lot of liquidity in the financials and banking, then we need to take it out somewhere else. So where's that somewhere else? And as a trader, you need to kind of try to think about where would they want it to come out. Well, I bet they would love for it to come out in the crypto technology, the meme basket. So perhaps, just thinking out loud, perhaps all those stocks, those tech stocks, the Swiss bank, loaded up on that they have, maybe they're gonna help the Fed wash this liquidity out by dumping those on the market, and that could push technology to brand new lows. So and also help with the inflation, because I think in the end they don't really give a shit about a lot of sectors, but the banking sector is too important to let be a casualty of this tightening cycle. So if they could take that money out and that liquidity out somewhere else, I believe they would love to do it in the inflated asset areas that they perceive, which is still technology trading at high PEs or price to sales that make no sense, and also crypto, which they absolutely hate because it competes with their central bank digital currency and the dollar. So just keep that in mind. Be really careful. These are the games I think could be happening behind the scenes because, again, if you look at where tech needs to go, we're talking tech at 180, 160, which is really the NASDAQ at close to 8,000. I mean, that's a big drop, guys. That's a big drop in all those stocks you love, the safe havens, the stocks that you cherish and they just can't go wrong. I mean, Apple is like, it's like buying, maybe like a treasury bonds, and it's risk free. But I mean, look, I mean, guys, I mean, I don't make these charts up, but I mean, this is the chart, right? If this chart is right, this is actually going to 6,006, which is really only the March 20 lows. I believe all this could come out. And I believe that's what the Fed would love to do. If the Fed could say, if I could save the banking system, but yet the cost of saving it and reduce inflation is I have to crash tech down to these levels, I think they would do that in a heartbeat. And if they could do that and get the deflation they need and the tightening in these areas, and then them trying to make up for some on the banks, I think that's good. And I think that's the games I think going to be happening in this part of the correction, because again, people perceive Nvidia as like a stable coin, as like risk free, but I think to cause what's going to come here, this is going to be something. And I was thinking, what could do this? Well, imagine if we start hearing the Swiss banks dumping their tech stocks on the open market to make, for whatever reason they give, or some other major fund, has to sell their family jewels and trophy case to pay, to make ends meet. So, or the Fed is doing this, secretly through intermediaries to take the money out that they're putting in the banking sector, where net on net is still a drain overall on liquidity. But as long as the banks are holding up, then they're okay. Again, just speculating, but this is like, if you look at it, it's like a cup and handle on the upside, on an inverse. And when this breaks, there's no support. There's no support until you get really down to 76 here, 8,000, and then strong support back at 6,000, 6,003. But from pretty much here to here, it's a free fall. And even from here to here, so just be careful, guys. The market is dangerous. And I think we know the unorthodox bottom. We knew that this sea leg was going to happen. It just looks like it's happening a lot sooner than I expected. And we'll go from there. And like I said, I would still hedge just in case you get a bigger B with a three-wave move down to this area. Or you can get a flat in B, where A is here. So a lot of options. All right, guys, that's the end of my video, and we'll see what happens tomorrow.